G'day traders, how we doing today? Let's check out these trades. This is take two. Couldn't drink my coffee while doing the video. Anyway, so we had a high and a higher high, and we had a lower high on the OSMA. So that lines up, see? Right there, close enough. That was divergent, and that was before the open of the U.S. stock market. This is 8 o'clock starting here now. So if you sold it on the opening of this candle with the arrow on it, your stop would be 33 points exactly. And it went down 180 points, okay? But along the way, there is some other trades, you know. Yes, you know, right here. Higher close, sell it, down it goes. Higher close right here, sell it, down it goes. Now you see this next rally up. There's no higher close, sell it, and down it goes, because this one is so far away. Remember, it needs to be near the 5 EMA, this white dash line. It wasn't. It closed above it. There's no trade. But you know my SmackDown trade, if you listen to my videos, right? See how they have them, they did a buy fake and they suckered all the buyers into buying right here. And then what did they do? They smacked it down. So I would have liked to seen it smack down just a little bit more, but that's okay. Once it came right back down below this little tiny wick here, let me make that bigger so you can see it. See that little wick right there? Yeah, so if you would have sold right there, okay, went down 25 points before it went back up again. Okay, by SmackDown trade. But if you held it all the way down, that's 80 points potential right down to the bottom, okay? Which is good. Which means my higher close, down it goes works, my divergence trade setup works, and my SmackDown trade right here. That's the SmackDown. I should confirm that with something. What could I confirm it with? What other kind of doodads do we have here? Okay, stop sign, check sign. Yeah, we'll do this one. So this would be, okay, right there. Now when you see an X on my chart, that is the SmackDown trade. I don't know what else to fucking call it. What the fuck would you call it? The buy fake? I don't know. It is a buy fake. That's what I call it. Buy fakes. When they fake people to buy it, I call it a buy fake. When they fake people to sell it, and it goes back up, that's a sell fake. Yeah. So this is the X. I will use this X when I see a SmackDown trade where price comes up, closes up above the moving averages, and then they smack it down. Okay? That's right on the opening or the break of this wick right here. You would sell it. And down it goes. Okay, let's move on. We're looking at now the S and the P. And we had the same high retracement. If we put it to here, no, it's still, well, kind of, yeah, it didn't have my filter present. So there was no trade there yet. You weren't selling here yet. You were selling, yes. Over here, this is more so my setup, and I'm not going to say what it is. It's in my course. So anyway, it's actually a combination from my very first excellent trading system that I created in 2009. Okay? Yeah, I've been around a while. And believe it or not, it still works today. If you can get your hands on it, hey, I don't try and sell it anymore today, but it still works today. It's called Forex Pipsnagger. But anyway, what I'm teaching you here and sharing with you will keep working till the test of time. I honestly do believe, because it's worked since 2009. Divergence, I've went back even farther. It's been working for probably 30, 40 years. So either the algorithm creates these divergences or human intervention of trading does. I don't know which one for sure. Okay, back here. Let's put an arrow on here. So yeah, the trade on the opening of this candle right here, you would have sold it. Stop would have been 6 points, 6.5 points. How much did we go down? We went down 19 points. Okay? Okay. Then we had a higher close. Sell, down it goes. Another higher close. Right here. Higher close, sell it, down it goes. Here's another one, but guess what? It doesn't qualify. Do you know why? Because it's not near it did not close near the 5. Okay? Even though it would have worked. Okay? Then it turned into a chop shop hell raiser. That's what happened here. They're raising hell here. And I don't see no trade in there. Actually, there is, but who's going to sell it way the hell down here? There's hidden divergence right here. Okay? From here to here and here to here. You would have sold it somewhere up here, but oh, actually. Okay, I'm mistaken. I see it now. I just see all these flying candles up and down all over the damn place. Okay, so it's this candle. Holy shit. On the close of this candle, let me make this bigger. On the close, right here, there was the trade, okay? The divergence was from here to here, okay? From here to here. There's the divergence, okay? Okay, this needs to go down here, but it's still valid. It's a blue doodah, right? This one maybe needs to go to here. Watch, I'll show you it lines up. I'll show you it works right here, okay? Right there, see, that lines up. And over here, see, that lines up. So you would have sold it right here on the close of this candle. Your stop would have been 7, 8 points. It would have gone against you about 5 points. How many points is the stop? 8 points. Did we get 8 points? No, 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 no. Oh, so close. Oh, look at that. There's 8 points. I wouldn't count that as getting 8 points. Come on, it's right down to the bottom of that little wickster there. Yeah. Anyway, that was the trade. If you're watching it in real time and doing it. And then we have a low and a lower low. See that? Divergence to buy right here, but look what it was. It was a buy fake. And down it goes, right to your stop. Okay, that's enough of that. That's enough of that frickin' S&P 500. And what's really funny is, see how it, well, that's not a good example. Let's look at the NASDAQ quick again. We're in a big downtrend here, huh? Yeah, yeah. But look at on the Dow, man. Did it go down? No, it fucking went up. See, for all I used to use one of them for a guide. Okay, if I was trading the Dow or the NASDAQ, I would use the S&P for a guide, and they used to follow each other. They don't always follow each other anymore, so you can't use that as your guide to, like, you know, because now one's going up, the other one's going down. You can't use that as a guide. But anyway, I'm talking too much again. I'm sorry. We got low and lower lows. Let's just get this done for the folks. Right here. That's hidden divergence, ladies and gentlemen. Okay, so you would have got in right here. Here's another trade here. Oh, and another one right here. Lots of them. Lots of them today. Yes. Lower close, buy it right here. Up it fucking goes. Here's another one right after that. Lower close, buy it. Up it goes. You could have been, coulda, woulda, coulda, should have been doing these scalp trades here. Let me make it a little bit bigger. There, now you can see it, okay? So, here's the entry for the divergence. It's right here. Your stop would have been right there, 30 points. Went up 90 points. Then we had a lower close, buy it. Up it goes, 53 points potential. Then we had another one right here, lower close, buy it right on the opening of this candle. 47 points potential. Then we had another lower close, buy it, up it goes, okay? You following me here, guys and gals? And that was good for 40 points potential. And we have another one. Would I suggest you do them all? No. Now there's too many of them. But I tell you, I'd give up after this one. And what time was it here? It was 10 to 11. Definitely would give up after this last one. So here's the lower close right here. On the open, buy it. Up it goes. Another 40 points. Crazy, huh? Gotta love my lower close, buy it, up it goes, and my higher close, sell it, down it goes. You gotta love those trades, man. They're fucking awesome. And no smack up trade. Okay. That's it for the Dow. Let's move on to the pound dollar now. We have divergence all over town. We have a high, a retracement, and a higher high to the wick. And we have that. Yes. Nice divergence, man. So, for the divergence on the opening of this candle, right here, you would sell it. Stop loss, 31 points. Went down 36 points. You would have got your 1-to-1. And over here, see these here? They closed, the bullish one closed above the two moving averages, and then the next one beside it opened above them also. And then the next ones after that closed up above and opened up above. There's no higher close, sell it down, it goes here, but there's something else. Can you see it? Right there, man. Oh, yeah, baby. There's the smackdown. Actually, no, this one. Only this one, not this one. So, right here on the close of this X candle, the close, I always work on the close. I always enter all my trades on the close. Do you know, on the close of the candle? Do you know why? Because there's an old saying, I don't even know from when, I learned about it from my broker, Tim Hannigan, best grain analyst in the world, but he's now passed on to heaven. He taught me a lot of stuff. But anyway, he was one of my mentors from back in 2003. But anyway, he used to say, it's not how it opens, it's how it closes that determines the near-term trend. So you see right here where it closed right here, they smacked it back down. It was right. It closed lower, below the moving averages. So you would have sold it right here. You would have had a little bit of drawdown. I don't know, like, what are we looking at? Pound. 5 pip drawdown. total max potential pips, 25 pips, right down there. And then we have a low retracement, lower low. So we would have got long right on the opening of this candle right here. Your stop would have been 21 pips. There's your 21 pips right there. And then it turned into a shit show. Zigzag show. Fucking bullshit. Oh, yeah. I try not to swear, but I can't help it. And what do we have up here? We have more divergence. That's what we have. High retracement, higher high. Okay? You see that? That is divergent. Right there it lines up. Oh, right there it lines up. Okay. I like to draw it to the highs, but it's even more divergent. Okay? Come on. So right there and right there lines up. You see that? And the entry would have been right on this candle. Right on the opening of this candle right here. Don't know. Doesn't look like it's going to work out to me. Anyway, I'm not a financial advisor. This is for educational purposes only. Okay, let's move on now to the euro. Oh, very choppy, but it had the same nice trade from above. High, put in a high, retracement, higher high. Just like that. And you would have got short right on the opening of this candle. Okay. And it went down 35 pips. Then we had a low retracement, lower low. Okay. Right there. Oh. This one doesn't count. No. There's no higher close, sell it. Down it goes because they're above the moving averages. There's no trade there for that. But there's a trade for this. Okay. They don't line up perfectly, but I'm not going to try and get them all perfect, line them up. So you would have got long somewhere in here, and look, it just turned into shit. Turned into shit, chop shit action. Okay. Let's look at the pound yen. Beautiful. Beautiful trades here on the pound yen. First one was a buy trade right in here. Okay. Second one was a sell trade right there. So if you would have bought it right there, your stop would be right here, 21 points, and it went up 86 points. Then we had a high and a higher high. Okay. I just didn't draw it there right. That's a sharp incline up, huh? That's going up Mount Everest right here. Yeah, yeah. And right here, would have sold it here. Stop would have been 25 pips on the pound yen. Went down 39. So you would have got your 1-to-1 quickly. Very, very quickly. Here's one of my SmackDown trades. Let's put an X on there for the fun of it, huh? So right there. Boom. On the close of that candle, you would have sold it because they smacked it back down and closed near the low of the candle. Okay? So, stop would have been 13 pips. Went down 19 pips. You would have got your 1-to-1 win-loss ratio on that trade as well. Oh, I like my new X's. I think they look cool. So, people, all of you traders, you can identify all my trades now. Okay? With the X, the arrow, and I gotta throw one of these in there. lower close, buy it, up it goes. Okay, so you can identify all my 3 trade setups here now, which are divergence, lower close or higher close, and my smackdown trade with the X. Okay, let's move on now. Euro yen. Wow, it doesn't have a, unless I draw it from last week. Oh, no, there's a trade. Let me show you. Let me just take the auto scroll off. There's a trade. Oh, yeah, where is it? Where is it? It's right here. It's right here. This goes up like this. Yeah, here it is. Okay. So we go like this. Down here like this. This one, we go up like this. One's going down, one's going up. What does that mean? It means it's divergent. That's what it means. We got long right here. It went up 69 points. And this red line was the low of yesterday, and that white line up on top was the high of yesterday. I like to mark them. Okay. What do we have up here, ladies and gents? We have more divergence. That's what we have. Today was a good day for divergence with a little bit of chop. Just like that. Right on the opening of that candle, you would have sold it. 18 pips. And down 56. You would have got your 2 to 1. Let's look at gold. I bet it's messy. Yeah, it's messy, all right. Oh, I got no water here. Mode Z. We got to get some water. Okay. I got some aqua. There's no trade up here on gold. There's no divergence. But we do have a higher close. Okay. Down it goes. Closes here. Oh, actually, this goes on there. On the opening of this red candle down with the big wick, that's where you would have sold it. Okay. You would have got some drawdown, about 10 or 11 pips on gold. Oh, hold on. No, that's just, I was trying to measure that. That's not where you'd put your stop for these. I don't use any stop. When I see it going bad, that's my stop. I click out of it. That's just the way I trade. Went down 30 points. Okay. And you see here, higher close. It qualifies. It qualifies. Let's see. Did it work? Yeah, higher close right near the, unless, I don't know, I'd have to see it at the time because sometimes these moving averages will look like something after the fact, but we don't know. We don't know how close this blue candle closed to the white dash line at the time. So yeah, sometimes you can't, you don't know. Anyway, then they did a buy fake up here, and they took it down again. Here's a smackdown trade, but I don't know. Would you really want to take it after this crapola? I don't know. Let's put an X on there and see. Right there. Yeah, you would have sold it on the opening of that candle. Went down 29 points. And then low and lower lows. Just like that. And you would have got long on the opening of this candle. Stop would be 34 ticks, and you got your 34 ticks up here. It took a while. It wasn't pretty. It was messy, but you got it. Let's take a look now at the last instrument of today, which is oil. It just sold. It sold the motherfucker off. You see it? They take it up to 79.50 almost up here. And then they just trash it. But they made it look like, oh, you know, we're going to take it up to $80 and then keep going. No. They did not do that. No, 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 no. Just show you this nice double top up here. Of course, it's going to fucking do that. Anyway, it's a double top. Would you get in after they rammed it down fucking 80 points? I wouldn't have. Yeah, man, it's 80 points. And did it go down 80 points? Yeah, it did. It just did. See that? You would have got it. You would have went through some hell, but you would have got your 1-to-1. Okay? Let me show you on the Osmo where it is. It's right here like this. And the arrow. And then you have another trade. Excuse me. So, this one here closed right close. At least I think it did. And you'd have to be there in the live at the time. You know, it's got to be very close to the dash line where it closes. See, right here? So on the opening of the dash line, I mean, the opening of the candle, the next candle right here, you would have sold it. It first went down for 34 points. That would have been a good place to take the profit right there. But if you held on to it, it went down like 77 points all the way down here. But here's the higher close. It qualifies because it's in the zone in between the 5 and the 7 EMA on the close. Okay, it's in that zone. So it didn't close up above the 7. So there was still a trade. And you would have sold it right there, and down it goes. And then it turned into caca. Until over here. And what happened over here? What time was this at? Yeah. When the fucking stock market opened. Okay. We basically had another double top right there. Oh, I hate these lines, how they stick to the fucking candles. They're good and then they're bad. Good and bad. You know that sign there from the Asian people? It's half black and half white. There's good and bad. That's trading for you. There's good when you win, and then there's bad when you lose. All right, let's move on with this, ladies and gents. We're on the last fucking trade here. Right there. That's a double top. You would have got in right there. Okay? But it was dangerous. There was all this support right here you really needed to clear through. If you waited for another 5 minutes and seen that, okay, we cleared all this crap here, you know, you could have sold it there or waited for it to come back up a little and then sell it here and down it goes, right? So let's just say we sold it here. Your stop would be 130 points. This is oil, ladies and gentlemen. It moved down like big time today. 400 points it fucking moved down. So you had a 130 point stop Did you get your 130 point stop? Yeah. You got it within like 20 minutes. Okay? So anyway, oh, I got to draw it down there. Jason, you're always forgetting. Jason. There it is there. Okay. Higher close, sell it. Come on. Higher close, sell it, down it goes. Here's another one, higher close, but it may have not been close enough to the 5 at the time, but we'll put one more thumbs down on there. Right there. See, to trade this, to trade these higher close and lower close setups, okay, you want to make your chart as big as Dallas, Texas. Have yourself a T-bone steak along with it, all right? All right. So anyway, when you make it big, you can see it much clearly. Like you're just sitting here, you're waiting for it to close, and then you sell it, and down it goes. Waiting for it to close, then you sell it, down it goes. That's it. Very simple. How do you know to sell? Because where's the slow moving average? Where's the faster moving average? That's how. When the 5's below the 7 and it looks like it, and they're like pointing down, it's telling you we're in a downtrend right now. And we're not going to change until we change. So this is what tells you when you see a higher closing candle, okay, then you can sell the next one. Higher closing candle, see, you can sell the next one. Why can you? Because it's going down, right? It's going down, ladies and gentlemen. See that? It's going down. That's how you know. Okay, thank you for listening. Thank you for watching. If you could please subscribe and hit the like button. The like button, that is. I don't know. It sounded like I said light button. There's no light button. Anyway, if you guys are trading this afternoon, trade safely. Be cautious of what can happen. It could this oil could rally right back up again to $80 today. Nobody knows, man. Yeah, they just they know where the orders are and they go and they get them. Okay, let me show you here. We'll go on the 30-minute. Look at that shit. Look at that shit. See what they did here? See this from yesterday? That low? All the people who were buying all the way up these foothills till they hit Mount Everest, the Twin Peaks, okay? All those people buying all the flipping way up. Look what happened to you today. For those of you who, you know, really thought this was going to go to the moon like up in the 80s, right? You would have put your stop right here. Right freaking here, ladies and gentlemen. And look where they took the price. Isn't that convenient? Like, they know. They know there was a pile of fucking gold here. And they dug it up. The orders, the stops, they took it down and they got you. And for those of you who had less risk, you put your stops in here today or even here. They got the stops here, they got the gold, then they came through here and they got the stops here, and then they came all the way down here. I bet you it won't go any lower today. It'll probably go back up to 77.50 or something, somewhere up here. Probably won't go lower because they got the gold right there. All right, ladies and gents, don't forget, hit the like button, subscribe, have a great day, good luck, and good trading.